Good morning, children. How are you all? Hope you all are fine in your houses. Okay, fine. I'm also fine, students. Okay, shall we come back to our lesson? In accountancy, we are learning the fifth lesson. Okay, that admission of a new partner. Here we have started learning doing the problems with that one adjustment, because at the time of admission they need to do some adjustments. The first adjustment itself is the distribution of accumulated profits and losses and the reserves. Okay, all these things they have to distribute in to the old partners in the old ratio. Okay, there we have completed two problems. The third one we will see. Okay, now I will show you the third illustration first, then we will do the next exercise. Okay, see, Ratna Kumar and Arogya Das are partners in a firm sharing profits and losses in the ratio of 3:2. The balance sheet on 31st March 2017. Buildings, plant, furniture, data, stock, cash at bank. Then capital, both of them. Then profit and loss appropriation account, general reserve, workman compensation fund, sundry creditors. Here, let us read the adjustment. David was admitted into the partnership on 1/4/2017. Pass journal entry to distribute the accumulated profits and reserve or admission. So here, what are the accumulated profits and reserves? Here, profit and loss appropriation account, then general reserve, then workman compensation fund. Okay, so these three we have to distribute. What is the question? Pass journal entry. So only journal entry we need to write. See, all the profit accumulated profits and reserves they have written. Profit and loss appropriation account data, general reserve account data, workman compensation fund account data. Okay, since they are liabilities, they show the credit balance. So now to cancel them, we are writing as debit, and the partner's capital account should be credited. And all these things you add and distribute in the old profit sharing ratio. Old profit sharing ratio is 3:2. Okay, so 3/5, 2/5 we have to distribute and give. Okay, accumulated, then we have to write the narration. Accumulated profit and reserve transferred to old partners capital account in the old profit sharing ratio. Okay, now let us see the exercise. Okay, see, Ovia and Kavya are partners in a firm sharing profits and losses in the ratio of 5:3. They admit Agalya into the partnership. Their balance sheet as on 31st March 2019. Balance sheet given, everything. See, the same as the illustration. Profit and loss appropriation account, general reserve, workman compensation fund. Pass journal entry to transfer the accumulated profits and reserve on admission. So let us write the journal entry. Okay, the question number third one, journal entry. We know 5 columns, isn't it? Date, particulars, LF, then debit, credit. So date, when the new partner is admitted, now maybe the last date. Okay, 31st March. Okay, 2019 March 31. Okay, then what and all debit? Profit and loss appropriation account data. General reserve account data. Workman compensation fund account data. to two old partners, Ovia and Kavya. Ovia's capital account, Kavya's capital account. Okay, accumulated profits and reserves distributed to old partners in old ratio. Okay, now we should calculate this amount. Okay, all the total amount 40,000, then 48, then 50, 60,000. Okay, 60,000 into ratio 5:3. Okay, 60,000 into 5:3. So 8. 7 8s are 56. Then remaining 4 40. 5 8s are 40. Then 20 into 5. Okay. So for Ovia, 5 5s are 25, balance 2. 7 5s are 35 plus 2, 37. Other person 3. Isn't it? So 75 into 3. 3 5s are 15, balance 1. 3 7s are 21 plus 22. Now you write each one. Okay. Profit and loss appropriation account debtor 40,000. General reserve 8,000. Workman compensation fund account 12,000. This is the journal entry. Okay, now let us learn the next heading. Okay, beginning I have told you in the 5th lesson, revaluation of assets and liabilities not included, but in the next one they have given. Okay, so we need to take revaluation of second adjustment. Okay. Revaluation of assets and liabilities, because we when they admit a partner into the partnership firm, we have learned that all the that agreement come to an end. Okay, so they have to revise the profit sharing ratio, reevaluate the assets and liabilities, everything. And in that accumulated profit should be distributed to the partners in the to the old profit sharing ratio, isn't it? So any profit, that means if any increase in asset, that is the work of the old workers, old partners, so it should be distributed. Okay, so what we have to do when we revalue, sometimes the value of assets may increase or it may decrease, or the liabilities value may increase or it may decrease, isn't it? 4 possibilities. So it will be transferred to one account that is called revaluation account. Okay, revaluation account should be prepared. Okay, if any profit items, the revaluation account should be credited. So what will be the opposite? If any loss on revaluation, it will be debited to the revaluation account. Okay, and at last we will calculate the profit. If the profit gain is more, then we will get this side. Okay, then it will be transferred to the partner's capital account. The profit from the revaluation account. Okay, the profit of the revaluation account will be given to the partners in the old ratio. They will share and give. Okay. So first we should prepare the journal entries. Okay, journal entries. For any increase in that asset, okay, that should be debited. Okay, assets account debtor. Increase in value of asset account debtor. Then any decrease in the value of liabilities, that liabilities should be debited. And which account should be credited? Revaluation account. Okay, these both are the profit item. Okay, so any assets value increased, any liabilities value decrease. Okay, any liabilities decrease, then it should be debited. Then any asset not recorded in the previously in the balance sheet, now we have to record them. Okay, so we will debit that asset account. Okay, then revaluation account should be credited. So what is the entry? Asset account debtor, then liabilities account debtor to revaluation account we will post. Then now this is the profit items. Okay, now we are going to see about the loss items. Any decrease in the value of liabilities. Okay, liabilities should be credited. Here we have to debit the revaluation account. What should be credited? Liabilities. If any liabilities increase or if any assets value is decreasing, then we have to credit that asset account. Okay, so what should be debited? Revaluation account should be debited. Okay, now we have prepared any liabilities we are going to create or provide any provision for any doubtful debts. All these should be credited, but the revaluation account should be account we will debit. Okay, so these are the loss item and some of the profit items. If we enter this one and if we prepare the revaluation account with the help of these journal entries, we will post in the revaluation account and we will find out the difference. That will be the profit if the credit side is more. And if it is a loss, that means loss is more, we will get the balance on the credit side. So credit side we have to debit the capital account. Okay, that journal entry also we have to write. The revaluation account debtor to old partners capital account in the old profit sharing ratio for the profit, and capital account debtor to revaluation account if it is a loss. Okay, now let us see the fourth illustration. Okay. See, Rajesh, Ramesh are partners sharing profits in the ratio of 3:2. Raman is admitted as a new partner and the new profit sharing ratio is decided as 5:3:2. The following revaluations are made. Pass journal entries and prepare revaluation account. The value of building is increased by 15,000. Value of machinery is decreased by 4,000. Provision for doubtful debts is made for 1,000. Here, what is profit, what is loss item, we have to identify first. Okay, value of building is increased. So it is what? It is a profit item. Asset value increased. Okay, if the asset value decreased, it is a loss item. Okay, then provision for doubtful. Any provision we make, that is a loss. Okay, together as one entry also we can prepare, but they have asked past journal entries. Okay, so we will prepare because it is in the beginning we can prepare for each and every adjustment one journal entry. For increase in the value of building account data to revaluation account. Appreciation in the value of building recorded. Then machinery decreased. So machinery, then they have written together. Yes. Okay, profit item 1, loss item together. Revaluation account should be debited. We should credit machinery and provision for doubtful debts. Okay, now we have to prepare the revaluation account. Okay, we should post these journal entries. First, building account data to revaluation. So we are crediting in the revaluation account as buy buildings. The next one, revaluation account debit. So debit side, to machinery, to provision for doubtful debts. Okay, here 15,000, here 5,000. Find out the difference, we will get 10,000. Okay. Rajesh capital account. Here we underwrite like this. Okay, to profit on revaluation transfer to old partners capital. Okay, Rajesh capital account, Ramesh capital account. Their old ratio 3:2. Okay. Now this 10,000 should be divided in this ratio. We will get 6,000, 4,000. Okay. Then we should write this journal entry. Revaluation account data to Rajesh capital account to Ramesh capital account 6,000, 4,000. Profit on revaluation transferred. Okay. Now let us do the fourth exercise. Hari, Madhavan and Kesavan are partners, sharing profits and losses in the ratio of 5:3:2. As from 1st April, Vanmadi is admitted into the partnership and the new profit sharing ratio is decided as 4:3:2:1. The following adjustments are to be made. Increase the value of premises. So it is a profit item. Depreciate stock, furniture and machinery. So this all loss item. Okay. Provide for an outstanding liability. So liability increasing. This is also loss item. Pass journal entries and prepare revaluation account. Okay, so first we will write the number. Okay, 4. Now revaluation. We will write the journal entries. Okay, date, particulars, LF, debit, credit. Okay. So increase in the value of premises. So date, admitting date. Okay. So 2017 April 1. Which one should be debited? The premises. Premises account data to revalue. Only one profit item. So revaluation account should be credited. Okay. Profit on revaluation recorded. How much amount? 60,000. Okay, then next one. Depreciate stock, furniture, machinery. So which account should be debited? Revaluation account should be debited. To stock, furniture, machinery. Okay. Loss on revaluation recorded. Amount given, isn't it? 5,000 stock credit. Furniture 2,000. Machinery 2,500. So 9,500. Now we have to leave some space for the third entry. Okay, now we will, one more item, isn't it? Okay, we will write another entry. for C. Okay, here loss item. So revaluation account debtor, to provision for outstanding liability. Outstanding liability. How much? 500. Loss item recorded. You have to leave some space for writing the revaluation profit or loss. Okay. Now we have to use both the pages and prepare the account. Revaluation account. Okay, revaluation account. First, at premises, it should be credited, isn't it? By premises, 60,000. Then, debit side, to stock, 5,000. Then furniture, 2,000. Machinery, 2,500. Then provision for outstanding liability, 500. Now find out the difference. Okay. Here 10,000. 9,500 plus 500, 10,000, there 60,000. So the remaining 5,000 to revaluation profit transferred to all the old partners. Okay, Hari's capital account, Madhavan's capital account, and XII's capital. Now 50,000 in which ratio? 5:3:2. There also 10 coming, isn't it? So total 10. So how can we calculate it? 50,000 into 5/10. So 10. 5,000 into 5, 25,000. 5,000 into 3, 15,000. 5,000 into 2, 10,000. So we get 50,000 right here. So total 60,000. Now we should complete the journal entry. Okay. Revaluation account debtor to Hari's capital, to Madhavan's capital, to XII's capital. Okay, profit on revaluation transferred. Okay, here total 50,000, here 25,000, 15,000, 10,000. That's all. Okay, that problem got over. Okay, we will do the other problems in the next class. Okay, students, thank you very much.